TV18.
Where the Nifty fell 1% in this financial year, underperforming its Asian peers. IT was one of the worst performing indices, losing 21%. That's in the financial year FY23, while PSU Bank Index gained for the third consecutive year. Well, we put to an end FY23. We begin a brand new fiscal starting tomorrow. So on this edition of the Editors Roundtable, we discuss the market setup as we head into a new fiscal. We also put the spotlight on a couple of sectors. There's the pharma companies that we're going to look at, and we're going to tell you all the big triggers to watch out for in the next fortnight. I'm Sonia. With me, I have the editors, Prashant, Nigel, Ekta. Folks, it's the last day of a truncated week and another truncated week to come.
The way the excitement levels were zooming, it was always as if you're ending the calendar year 2020. Even in closing bell, it seemed like that, right? Because you were coming out of a holiday, you're going into a long weekend, and then there is next week. Nigel is...
Now I've done the calculations, right? I told you all. If you calculate from yesterday onwards, you have 18 days. Out of the 18 days, 10 days you're shut. Yeah. So you have to come only for 8 days. So stay well and come for those 8 days.
And the IPL
kicks off today.
Yeah.
Who are you going with?
Mumbai Indians, as always. Yeah.
What about Dhoni? This evening he's playing.
Oh, yeah, he is. Yeah.
I mean, that's the only...
so there's lots, right? There's truncated week coming up. There's IPL. There's salary payday, which has already come for us. But yeah,
actually, Sonia's not aware because she's not debited the salary. It came a few days ago.
She was probably at the Dior show shopping.
I wish. But overall for the market as well, right? I mean, give and take everything. We've had a good run, and finally there's some respite for the bulls.
I mean, it looks like it, right? You can call it NAV management, and people were talking about that. But I think you finally are starting to see some room for relief rallies come through. We were actually talking about this tactical up move relief rally 3 weeks ago, and then this SVB bank thing happened, and everything went into a tailspin. But I mean, those issues seem to be resolved. Not resolved, at least they are not festering anymore. They're in the background. And that's the reason why we are saying that perhaps, just perhaps, as we start the new FI, when we come back next week, there perhaps may be a little bit more to run. Let's just quickly run you through a very simple graphics will tell you where we stand really without going into too much detail. The Nifty has underperformed most global markets by quite a bit. These are all local currency term returns. Year to date, the Nifty is down 4% now. The S&P is up 5.5%. The Nasdaq, of course, is zooming 15%. And you got the European stock index, the benchmark there, which is up about 13% or so. I mean, looking at the screen, you would have thought that the problems are coming from India. I mean, it's not the case. The problems were from the West, but those markets are doing just fine. And that perhaps is a function of the huge outperformance that India saw last year as compared to most other global markets. Now, India also is extremely oversold. I looked at the latest EPFR data, right? At the margin, if this number starts to change a little bit, it may have a big impact. Remember, almost 95% of the foreign money that India gets is through global emerging market funds. And EPFR says that India remains the highest net sold emerging market year to date so far. That number is close to about negative $3 billion or so. Now come to valuations. Valuations have also, and we put this up a couple of weeks back, valuations have corrected. We spent 19 months with no returns. So that's a long period of time, and as a result of which earnings have caught up, and we are now at about 17.3 times FY24 earnings. The 10-year average is 17.6. So, by a sliver, you are slightly below. Mid-cap index, 1 year forward, that's FY24 valuations are 22.3 times. The 10-year average is 20.7, so you could say you're still a little more expensive. The small cap 1 year forward valuation is 16.4 times. The 10-year is 15.9 times. So it's not wildly overvalued, at least on the Nifty. You are now at fair value compared to the last 10-year average. Global markets have also become a little better this week, especially compared to the last 2 weeks were completely manic. And this week things seem to be settling down. And you can kind of look at all the headlines which are coming. But I think one data point which tells you more than anything whether things are settling down is how much are banks borrowing from the Fed's discount window. That's the big backstop. When banks are in trouble in the US, they go to the Fed and borrow, largely from the discount window. That number, week on week, has been coming down. The latest data for the week ended March 29th is on your screen, and from the peak of $152, $153 billion 2 weeks ago, it now stands at $88 billion or so. The big unknown, I mean, global markets, of course, they're not festering, they're not making headlines, so quiet is all good. But the fact is, if US markets, as many believe, will face trouble at some point in time, that is the big unknown. And you can't do away with the fact that the correlation is pretty high. I mean, I looked at data since 2001, and monthly returns for emerging markets, the EM index and US, are correlated in the same direction 84% of the time. I mean, that is a pretty steep, significant correlation. So you want global markets also to do well. We're no longer in the 2021 market where, I mean, whichever way the world went, the market here will continue to do well. Earnings, of course, start next week, and I think we will take note of that. Remember, after third quarter, there were steep earnings downgrades for FY24. That is something that you want to see running in the opposite direction. At least some stability in earnings, commentary, etc., will go a long way in helping the market find a little bit of floor. Nigel, you've looked at the full year, Nigel, FY23, right? And what did you find?
You know, at the start of today, we were staring at maybe we'll have the 4th consecutive negative month. So I was getting quite worried, right? Because then I had to pull out, suppose we have the 4th negative month, then I said, when was the last 5th negative month? So the last 4th negative month was in 2001. And that time we fell close on 22%. Then I said, but let's start bracing if suppose we fall again. So the only time we fell in 5 consecutive months was in 1996. Well, that's okay because we're not seeing that. We've broken that streak, and that's why we have ended the 4th month in the green. Let's talk about what happened last year. So last year was a quiet year, but it was a stock pickers market. And I say that because stocks, well, they went up 20 to around 50%, and they fell down as well 20 to around 50% odd. Let's focus first on the challenges that were upon us. One is interest rate hikes globally. They were expected to come about, pull out some liquidity from the system. Valuations in India were a bit of a concern. As Prashant said, they're trading at around 17.5 times. At one point of time, the Indian markets were trading at 21, 22 times odd. China reopened, took some part of the flows, and also China doing well. Well, Indian markets did underperform out there. And a couple of other reasons. The FIs, they've sold our markets for majority of the fiscal towards the end of the year. The US banking crisis, well, that's what put the global markets in a bit of a tizzy. Focusing on India, the Dow Jones as well as China. China has been a relative outperformer because of the way it rallied from November onwards. But focusing on the Indian markets, you'll see it was down only around 0.5%. The pain really was in the small cap index. That was down more than 10%, while the Nifty Bank did reasonably well. But there were plenty of stocks that were moving around. And the reason that the Nifty was more or less flattish is because from the Nifty itself, from the 50 stocks, you had big movers on either side. So let's get some of those up for you on the screen. On the Nifty, you had ITC that was up more than 50%. Remember, that's a big mover in there. Mahindra and Mahindra, one-way ride. It was up close to around 40%. NTPC, HUL, as well as Britannia. So those are the big winners from the Nifty pack. On the losing end, though, you got the stock wrong, well, you paid for it big time. And the Nifty IT index had its worst year since FY 2009. It was down more than 20%, a big underperformer. And that's why Wipro, you have Infosys in there, and Tech Mahindra as well. Big losses out there. Besides that, Divi's, Hindalco, Bajaj Finserv, all of them were under some pressure. But you got the stock wrong from the broader markets and you paid for it. Loris, Gland Pharma, 50 to 60% lower. They were market darlings at one point of time. Vodafone Idea, you felt maybe it can't fall more. Well, it fell more than 40%, actually, nearly 40%. Biocon as well as Godrej Properties. But let's brighten up the screen, and before we wind up, let's leave you with some of the big gainers. Highly traded stocks, TVS Motors was expensive, is expensive. It's up close to around 70%. You have Bank of India, you have Tube Investments, CG Power, MMFSL. But you'd be really happy if you're looking at your portfolio and you had these stocks that should come up for you on the screen. They have doubled your money in the last 1 year. Apart Industries, Mascon Dock, Finolex Cables, Karur Vysya Bank, RVNL, as well as BLS. So if you had them, it was a good year. But otherwise, more or less a flattish year for the Indian markets, but a stock pickers market for sure. Back to you guys.
Nigel, thanks very much for that.
One thing I noticed in the list is that the stocks that have gained this year are the ones that have either a story going. So like the electric vehicle space, for example, right? That's the big focus area in future. So there's TVS, there's Tube Investments, then the railway and defense stocks, there's RVNL as well. So these are some themes which the street has perhaps latched on to, themes of the future.
Oh, absolutely. Defense is another one. I saw a couple of defense names, right? Mascon Dock, etc. Which have done well.
Talking about defense, we look at defensives, IT and Pharma. and IT seems to be not finding favor. But Ekta, Pharma index, all of a sudden, out of nowhere, it's come back in favor. Tell us what's going on there.
Absolutely. Well, you know, IT underperformed in FY23. Pharma has been underperforming from its all-time highs.
Indeed.
So I'm just going to get to the wall to talk a little bit about the stocks. If you look at it from a broader market all-time high perspective, the mid-cap pharmaceutical names, a lot of them have corrected anywhere between 50 to even 90%. For example, the likes of Wockhardt, Solara Active, Strides, all of these stocks have corrected quite significantly. So you have to put this week's rally into context in terms of what is happening in the pharmaceutical space from these all-time highs. So this week, yes, it's been in line with the Nifty. Remember that the Nifty itself caught up towards the end of the week, and hence the Nifty Pharma Index gained as much as probably what the Nifty gained this week. Now, one of the reasons why we're probably seeing all this come through in terms of interest is because defensive buying. We've seen the kind of global volatility which has taken place. Separately, there is maybe some amount of optimism which is coming in on growth. For example, BNP Paribas in one of their recent reports indicates a 10 to 11% revenue growth in the pharmaceutical space. Now, there is also the hope that price erosion in the US, which is one of the main reasons for the underperformance for a lot of the large cap pharmaceutical companies, is expected to abate to maybe mid to single digits as well. And COVID cases, every time COVID rises, there's always this hope that maybe there will be some benefit for pharmaceutical companies. So maybe that could be on the fringe in terms of a reason. Now, the other big reason for buying is also valuations. For example, they've corrected around 15% from their 52-week high, so there's still a way to go, and it's 10% away from historical valuations as well. So there is a catch-up which needs to take place. Now, remember that pharmaceuticals is a lot about individual stories. For example, people will like Sun because of its specialty pipeline, and a couple of others such as JB, Torrent because of the domestic play, Glenmark because of a possible R&D play, and steep corrections in terms of valuations for the likes of Aurobindo. I'm going to leave you with the valuations. For a couple of them, if, for example, Dr. Reddy's and Sun, they've been largely resilient. For example, Dr. Reddy's was at a fresh 52-week high today, but the others, Gland, Aurobindo, Lupin, it's been a rough ride for them.
Okay, thanks a lot for that, Ekta. So that's on the pharmaceutical space. But over the next fortnight, you have plenty of triggers that the market will watch out for. So I thought I'll just list down some of them for you. Starting tomorrow, you'll get auto sales for the month of March. And it's not going to be a pretty picture this time around. A lot of dealer and channel checks indicate that the demand for small cars, the demand for passenger vehicles in general has fallen quite a bit. Inventory levels have risen as well. And Nomura, for example, expects Maruti sales to fall by 8% in the month of March. So it's not going to be a pretty picture. In the two-wheeler space, as we know, demand has been weak, so there's no recovery there at all. The only space where buying action will come in is medium and heavy commercial vehicles. That also because there will be a price hike from the 1st of April due to the new emission norms coming through. So that's the only pocket that may see some respite. So that's a big trigger to watch. The other trigger is the RBI meeting that happens on the 6th of April. And over there, we are expecting a 25 basis points rate hike to come through. Of course, the commentary from the Reserve Bank of India assumes a lot of importance as well. Following which, next week you have the earnings season that kickstarts with Infosys numbers coming through on the 13th of April, followed by HCL Tech on the 20th, ICICI Bank, Nestle, etc. And this time around, there is an expectation that it will be a weak quarter for the IT sector. Just to give you a couple of numbers, Jefferies expects the aggregate revenue growth for IT firms to moderate sharply by 170 basis points in Q4. They will see just a 0.6% quarter-on-quarter growth. Macroeconomic headwinds have led to delays in deal ramp-ups, longer sales cycles, slower revenue conversion are some of the problems. But the big thing I'll watch out for is any kind of guidance for FY24. Infosys will be the first company to issue an FY24 guidance and set the tone for the new fiscal. In that context, Jefferies expects Infosys to guide for a 5 to 7% constant currency revenue growth in FY24 and a 21 to 22% EBIT. So a lot of big cues to watch out for as we head into the new fiscal.
All right. Well, thanks for that, Sonia. Well, I'll tell you what. Let's slip into a short break, but on the other side, we're going to push the tempo. Ajay Srivastava of Dimensions Corporate Finance joins in to talk about markets and various stocks as well. Stay tuned for that.